Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is creating a quite strong uptrend from a monthly standpoint after the break and retest of a quite important historical structured zone here from a monthly perspective. In fact, we can easily identify how this area here was acting as very strong previous monthly resistance, preceding all these rejections to the downside every time that the market was testing this area. And then the market with this impulse to the upside broke above the zone. And what we know in the market is that previous resistance, once it is already tested and respected in multiple occasions as resistance, once the market breaks above the zone and then goes for the retest of the area, at that point, that previous resistance becomes support. And what you would naturally expect at that point is a rejection to the upside away from that previous level of historical resistance, which at that point is turned support. So here in the monthly, everything is quite clear. We can also notice the retest of previous resistance turn support. And currently we have a market which is in the process of rejecting this quite strong historical support to the upside. In creating this rejection to the upside, what we can notice is that the market is also creating a quite clear uptrend. We can notice the creation of these monthly higher highs and higher lows. Every time that the market is pushing higher, it is creating new higher highs, and at the same time, it is also creating higher lows, which is the definition of an uptrend itself. Now, the last move was that of the creation of a new monthly higher high. So the next logical step for the continuation of the uptrend would be first to see the correction and then the continuation to the upside. So the next step would be the possible correction before then the possible continuation to the upside. Now, let's keep all of this in mind from a monthly standpoint and drop down on the weekly time frame. Now, here on the weekly, the situation is quite clear as well. We can notice how the market has just created this consolidation period and is now breaking out from the consolidation with this massive rejection to the upside. Now, as the market is creating this rejection away from this consolidation area, we also have to notice how the market has created now a new all-time high. So essentially we are in price discovery here for gold. There is no immediate resistance that this market has ever reached in the past because we are at all-time high levels here for gold. We can notice how the market is finding some resistance around this area with the creation of this wick essentially. But in order to see what kind of price action the market has been creating in printing this wick here on the weekly time frame, we have to drop down on the daily. Now here in the daily time frame, this is where things get quite interesting. In fact, what we can notice is that in creating this push to the downside, the market has now created a double top. There is the possibility that this push to the downside is coming from some institutional shorting. Now, in order to check if institutions are currently shorting gold, we have to go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. And if we look at the data for gold, we can notice how with the last reports, net positions have first increased, but with the very last report, net positions have been decreased. We went, in fact, from having 302.5k net positions down to 284.5k net positions. Now, this shows how institutions are now once again moving back to the bearish side for gold. We can notice, in fact, 5,200 shorts getting added from an institutional perspective and 12,700 longs getting closed. Now, what this means is that institutions are now again moving aggressively back to the bearish side for gold, therefore making it weaker in the very short term. So this comes with no surprise. The market from here is starting to this rejection to the downside, fueled by this institutional shorting of gold and profit taking on their longs during this push to the upside. However, we have to keep in mind that in the long run, net positions still have massively increased. We went from 234k net positions all the way up to now 284k net positions. So even though in the short term, we see that a short-term move back to the bearish side for gold, in the long term, the bullish positioning of institutions is very clear. We can notice how we have 343,000 longs from an institutional perspective compared to only 59,000 shorts. So in the long run, clearly institutions are aggressively positioned to the bullish side for gold. So what we have here when it comes to the positioning is a short-term bearish positioning, but a long-term bullish positioning. So that aligns perfectly with what we have already noticed from a monthly standpoint, a potential correction before then the continuation to the upside, with the development of this monthly uptrend. So here on the daily time frame, let's dig deeper into what we have from a technical perspective. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So from a daily perspective, what we can notice is that the market is currently creating this move to the downside. Now, that comes with the creation of an M pattern here on the daily time frame. In fact, we can see a first move to the upside, correction, the market then tried continuing higher, and currently it is pushing lower. Now, after the creation of an M pattern, there is usually a good probability to see a rejection to the upside. This is a classic manipulation pattern because when there is the creation of the neckline of the M pattern, which at that point is basically the previous low, there is a high probability that a lot of stop losses from a retail perspective are placed below the previous low. That is usually where people put their stop losses. So the creation of an M pattern essentially liquidates all those stop losses, creating more and injecting more liquidity into the market, which then gives the possibility for institutions to buy and push the price higher. So if the market here will continue with the creation of this uptrend, of this M pattern, at that point, how would I expect the continuation of the uptrend? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to the identification of early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, if the market here would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to resume the monthly uptrend that we have previously identified. That definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the Quant Analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools here. You will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show. So essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.